Hello, my name is Clive and I'm a director at Peak Accountancy Training. We offer online courses for you to study towards your AAT exams at levels 2, 3 and 4. So if you are interested in finding more out about our courses, please do visit our website www.peakaccountancytraining.co.uk. Well, in this recording, I'm going to be taking you through task 4 of the AAT Sample Assessment 2 for Principles of Costing. That's the PCTN exam. So let's have a look at task 4 and how we would approach it. It's worth 10 marks in total and there is a couple of requirements to cover. So looking at requirement A, we've got a tick box type question. We've basically got to state whether the following statements relate to fixed or variable costs. If you've looked at assessment 2, sample assessment 2, you'll realize there's quite a lot of questions testing your ability to be able to classify costs. It's quite a big part of the level 2 syllabus. So this is classifying according to cost behavior, and those 4 behavior types that we need to understand are fixed costs, variable costs, semi-variable costs and stepped fixed costs. So we've got to choose for this particular requirement as to whether the statement is referring to a fixed or a variable cost. So let's have a look at that first statement. Unit cost remains the same with changes in activity level. Okay, well that is the definition of a variable cost. Variable costs in total will increase as the volume of activity increases, and they'll reduce in total as the volume of activity comes down. But for every individual unit, the assumption that we take for costing purposes is that the unit variable cost remains the same. So very simple example, let's say we're making a table, and let's say that for one table there is £50 worth of timber being used, £50 of wood. So if we make one table, that is a total material cost of £50. If we make 2 tables, each table would cost £50 in timber. So the 2 tables combined would mean that the organisation was paying £100 for timber. So the total goes up, but the unit cost, each table's material cost in my example, remains the same. So that is the definition of a variable cost. So let's tick that one. Let's have a look at the next one then. The unit cost varies with changes in activity levels. Well, that would be true of a fixed cost. Unlike a variable cost, in total, a fixed cost remains the same, but as activity levels increase, so you are spreading that fixed cost over more and more volume, so the unit cost will come down. Again, let's throw some numbers in for a simple example. Let's say that our total fixed cost was £1,000 and we were producing 10 units. So simply dividing the 1,000 through by 10 means that the unit cost would be 100. A fixed cost of £100 would be charged to each individual unit. If we were to double our activity, so we're now producing 20 units, not 10, we would be dividing that same £1,000 by 20 units, which means that the unit cost would basically reduce to £50. So the unit cost is varying because of the changing activity level, but in total that fixed cost remains the same. So the second one is the definition of a fixed cost. Just for a bit of added value, what about the other 2 types of cost behavior? Well, a semi-variable cost just combines the component parts of a variable cost and a fixed cost together. So there's a fixed element, but then there's a variable element which will change in total as activity changes. And then the stepped fixed cost, where basically we have a fixed cost, it is fixed for a given level of activity, but then we'll come to a point that if we want activity to increase further, we might have to look at taking on more of the resource that is giving rise to the fixed cost. So there will be a step up in the overall fixed costs, and that higher level of fixed cost will be maintained whilst the activity remains within a certain range. Okay, well, let's have a look at our second requirement, and this requirement is all about absorption costing and the calculation of overhead absorption rates. If you remember from your studies, absorption costing is the type of costing where what we're trying to do is to absorb or charge a reasonable amount for the indirect costs incurred by the business into our cost units. Remember, if we classify costs by nature, we are separating them into direct costs and indirect costs. Direct costs can be wholly associated with doing a particular activity. So they can be wholly associated with producing a cost unit or providing a cost unit of service, for example. If you don't make the unit, if you don't provide the unit, you don't incur the cost. That's the direct relationship. Indirect costs are incurred by the business regardless of the level and the type of activity being carried out. But obviously, to be able to cost our products and our services to enable us to work out an eventual selling price to try and ensure that we make a profit, we need to incorporate all of the costs that have gone into production. So what we seek to do is work out a way to absorb a share of those indirect costs into our cost units. That's what absorption costing is all about. Now, the simple approach to absorption costing may be referred to as the traditional approach in some questions, works out an overhead absorption charge, an overhead absorption rate based on one of three things. Either the budgeted volume of all units to be produced in the period, or the number of labour hours of production to be worked in the period, or the budgeted number of machine hours to be run in the period. And whether you use labour hours or machine hours depends on the nature of your operation. Is it highly automated? Makes sense to use machine hours. Or is it very much manual? Makes sense to use labour hours. So let's have a look at our question after all of that. Barrymore Limited produces a single product. The following budgets have been identified. £95,000 of production overheads, 2,500 units of product. Again, that's a budget figure, and 3,000 budgeted labour hours. To work out our overhead absorption rates, we work them out in advance. We base them on our budgeted figures. After all, we need that costing in advance to be able to work out things like the price to charge to our customers. Now, we're told that the business is looking to identify how different budgeted overhead absorption rates affect the unit cost. And if they were to use machinery instead of labour, budgeted machine hours are 2,000. What we've got to do then is work out the budgeted overhead absorption rate if we were to use the very simple units of production method, or if we were to use the labour hour method, or if we were to use the machine hour method and use those overhead absorption rates to ultimately work out how much overhead we would charge to an individual cost unit. So to start with, let's work out the figures for the first column. What we need to work out for labour and machine time is how many hours of labour, how many hours on the machines does it need to produce one cost unit. So we can use the information in the question to simply work that out. The activity level is 2,500 cost units. So how many labour hours, if the budget is for 3,000 labour hours in the period, how many labour hours does it take to make one cost unit? We can take the 3,000 and simply divide by the 2,500 units, and that gives us 1.2 hours. Okay, what about the number of machine hours that are needed to make one cost unit? Well, we can take the 2,000 machine hours and divide it by the 2,500 budgeted cost units, and that will give us 0.8 hours per unit. So 1.2 hours of labour to make a cost unit, 0.8 hours of machine time to make a cost unit. So now we're asked to calculate the budgeted overhead absorption rate. So this is going to be the charging mechanism. This is going to enable us to be able to ultimately work out how much overhead we're going to charge to one cost unit. So the budgeted overhead absorption rate, to calculate it, very simple formula. Budgeted overhead cost divided by budgeted activity. And using the simple or the traditional approach to absorption costing, that activity will either be total number of planned units, total number of labour production hours, total number of machine production hours. So the budgeted overhead absorption rate per unit is going to be the budgeted cost, £95,000, divided by the budgeted volume of units, 2,500. It's going to give us £38. So we're going to be charging £38 of overhead to every cost unit. If we work out the budgeted overhead absorption rate on a labour hour basis, budgeted overhead cost 95,000 divided by budgeted total labour hours 3,000. That will give us a figure. It goes to many decimal places, but we're asked to enter values to 2 decimal places. We'll round mathematically, so £31.67. So for every hour of labour worked on a cost unit, we will absorb or charge £31.67 of overhead. So what about the overhead absorption rate per machine hour? Take the budgeted overhead costs, 95,000, divide by the budgeted total machine hours, 2,000, and that gives us £47.50 for every machine hour worked on a cost unit. We will charge £47.50 of overhead. So finally, we are asked to calculate the budgeted overhead for a cost unit. So using our budgeted overhead absorption rates, let's have a look at per unit. Well, the answer is going to be £38 because we've already worked out the overhead absorption rate on a unit basis. So one unit gets charged with £38. What about if we were absorbing our overhead according to the labour hours worked? Well, we've worked out earlier in the requirement that there are 1.2 labour hours needed to produce one cost unit. So the overhead absorption rate is £31.67 per labour hour. So surely for one cost unit, the costing would be 1.2 hours times by £31.67. The answer comes back at £38. If we work out the budgeted overhead cost per unit using an absorption rate based on machine hours, then it's going to be the budgeted number of machine hours to make that unit, which is 0.8, multiplied by the hourly absorption rate, £47.50. 0.8 times £47.50 is also £38. So basically, there is absolutely no difference. Now, this question is probably assuming that what we're producing is just one product or one service. So of course you would expect the eventual overhead charge, the overhead absorption amount per cost unit to be the same. But if our factory or our office were producing different products or different services, then that final charge per unit we could expect to be different if we were basing our absorption on the labour or machine hours, because basically it would depend for each type of product, for each type of service, it would depend how many hours of labour were needed or how many machine hours were needed. Okay, well that brings us to the end of task 4, a combination of cost behaviour and understanding absorption costing and how overhead absorption rates actually work.